Alright, what's up you guys? This is Janos with Trading Spies, and today I want to do a little bit different episode. Instead of a recap, I want to tell you guys how to actually open a small account and how to trade with the small account, because unfortunately it's so difficult to do it when it has such a bad influence over the internet. It's very difficult to see when you guys comparing yourself, and it's me too. So I'm falling into this category too. When you compare yourself to other traders, right, you see such a big numbers, everybody's so profitable, everybody's a millionaire, right? So inevitably you compare yourself, your how you did on the market, you did as well as others did on the market, and it's very difficult to leave all these aside. But the problem is when a new trader starts from the get-go falling into this trap, basically, to compare with the traders who's showing so much profit. But unfortunately it's two-way to look at this thing, right? One of them is they putting out these huge numbers, thousands, tens of thousands of dollars. They're not even showing any proof of the actual trades, right? And then basically what happens is they're just gonna try to lure you into some sort of course, right? Some sort of fake course, some sort of wannabe millionaire course, right? And the other end of it, they actually have profitable traders who make this much money on the market every single day, because it's achievable, I know. So but the problem is, if you try to compare yourself to those traders who's putting up the tens of thousands of dollars, you mistakenly not considering the part that these people has years and years of experience already, so much more education behind them. And also, let's not forget, the point is, when you see these huge numbers, those trades are coming out of a trade size what your small account cannot handle, right? So in one single trade can go in tens of thousands of dollars, sometimes even hundreds of thousands of dollars, to put up those big numbers for you. And yet you guys come onto the market, not all of you, but a lot of people come onto the market with false expectation to achieve those numbers with the small account. It's impossible. It's not gonna happen. Just because some fake gurus sold you a 3-hour course and then promise everything it comes with it, but it's just, that's not reality. I know it's achievable, but the package as they selling it to you guys, that's what I have a problem with. And this is the reason why I opened my account, to try to channel the reality, right? The reality into the small traders mindset, because I was one time, as all the traders, in a new trader shoes, right? Don't know what to do, no knowledge about anything, and try to figure it out the way, depend on someone to tell me what is right and what is wrong. But unfortunately in the today's environment, everything is so oversized, right? The profit, the cars, the watches, the money, and is distorting the reality how it's supposed to be. Like with everything in your life, you go to school, you study, you learn, you put the years of education first, right? You cannot be a doctor, you cannot be a lawyer, you cannot be yet even a plumber or an electrician, not just to compare, you know, the levels, but the problem is this is the most important thing what we forget, and especially the most important step what everybody's missing. So as you guys starting with the small account, probably a few $1,000 account, as I did too, and that's why I started my small account challenge per se, to show you guys how it can be done, right? We don't need, and especially in the beginning when we have no experience, tens and tens of thousands of dollars on the account, because that just gonna get blown out of the water right away. You can get lucky, right? Same thing, you go to Vegas, you can get lucky once or twice, but end of the day, if you're playing so long and you don't know when to stop, you're gonna go home with empty pockets, right? So yeah, let's get back to what I'm trying to do this episode about. And what I mentioned already, the education, and unfortunately that is the hardest part, because it's so many fake gurus out there who never even entered onto the market for a second. They come up with a strategy, they come up with a fake course what they try to sell for a bunch of money, and on the screen it looks excellent, right? Because you can show this is where you buy, that's where you sell, you made $10,000 a day, excellent, right? It's that easy, but it's very, very hard. Trading is the hardest easy job what you ever gonna have, because it has an element to it, a mental element what so many people just cannot get over. Even if you study, even if you learn, that aspect of it is a lot. So you have to be prepared mentally of the trading. But first of all, you have to be book smart, right? You have to understand the basic concepts of the market. You have to understand what is the candlestick about. You have to understand the way the candles move, the size of it, the wick of it. You have to understand patterns, the indicators. You have to learn them. You have to know what is the reason as it moves, what is the reason it goes up, it comes down, what is the support levels, what is the trend lines. All these you have to be book smart first. You just cannot enter onto the market just because, again, you bought a 3 hours fake course and then you think the next day you're gonna be such a profitable trader. It's just not gonna happen. Maybe you're gonna get lucky, but even that would be worst if you get lucky, because then you're gonna get a false hope of how easy it is, because it can be, right? Well, actually it never easy, but once you see how much money can be made, how quickly, then when you see how much money can be made that quickly, then you realize is very, very easy to get hooked. And that is the difficult part, to give up. And that's when the false hopes or starts. So the first is the education. I learned on YouTube, I learned from these guys. Also, I have a mentor who I consider as my mentor. He's trading completely different way as I do, but it was very, very helpful for education purposes for me to really show what's need to be done. And I won't say I took it with a grain of salt, but I have my common sense, right? As most of us should have a common sense. I know, unfortunately, in the today's world is like a superpower, right? But yeah, we just have to figure it out on our own if what they telling us, telling me, telling you has truth behind it, or is just a bull of crap, right? Um, Second, you have to have a system. You have to, once you have the education, once you learned, you have to build a system. You have to build a system what you think is gonna be profitable system. In this case already, because you have the education, you already can build experiment, not on the real market, not with real money. You just go look at the charts, you do your back test if this is works or not. You don't need to be on the market to find out if it works or not. You can do that on the charts purely if your idea works. Next, you need a computer. Me personally, I'm day trading, so I need a very fast computer because the execution is key when you day trading. You know, sometimes you see 6, 8, 10 monitors for the guys on the internet, but really you don't need that much. It's just gonna be so distracting, especially in the beginning when you try to focus. It's just gonna be very, very difficult for you to concentrate on your plan, what you planning to do, if you constantly have to take your focus off and look at 6, 8 monitors. You don't need it. In my point of view, what is the best, definitely you need 2, but preferably 3. And the reason why is, on 2 you need charts, and on 1 constantly need your trading platform. Because if you have everything on 1 screen, even on 2 screen, it's difficult because you have to go back and forth switching between the 2. You're not gonna be able to see your chart, even if you see your chart is very small, if you concentrate everything onto 1 screen. So that's why 2 for sure, 3 preferably. And also we just get to the platforms, we get to the brokers. Me personally, as you guys can see, on my trading episodes, I'm using for the charting software, I'm using the TOS platform from TD Ameritrade. In my personal perspective, this is the best. You basically get the real time data, so anytime you enter or open your chart, basically is showing you the real time, no lagging data, and it comes free. So that's very, very good. And it's so much built into the software, strategy wise, indicator wise, and just the layout. You can learn it. Also you can trade with the platform, depending on your strategy, what you planning to trade and how you planning to trade it. For me, the actual trade platform side of it is not suitable, so for that I'm using Webull and I'm using Interactive Brokers. And the difference between the two, Interactive Brokers is a fast platform. For me, I traded there for about a year, but the commission is just so high compared to others, right? It's a lot of platforms now free, so they don't charge any commission for the trades, for the entries. But when you trade options, and that's what I do, I trade options. For the options, usually they still do charge, commission for the contracts itself, and also the transaction fees, the regulatory fees from the exchanges. And the exchange fees is not a lot, but if they charge you for the commissions per contract, that can be not significant, but usually it's 65 cents per contract, right? On TD Ameritrade platform, on E-Trade platform. If you go to Interactive Brokers is much faster execution than the ones what I mentioned, but Interactive Brokers is expensive. A round trip on one contract, it can be $2, $2.50. My main problem is with the platform is the charges are not consistent. Every single time is different. Every single time, every single day is no consistency. You don't know if you're gonna pay $5 per trade or $10 per trade. Well, you know, it's not that drastic of a difference, but still, you have a difference. And my other issue with the platform is when you place a trade, at least for me, it always sounded as a partial fill. So it never actually indicating as you filled right away, right? So it's in your mind, what you have is you try to enter with 10 contract and it's partial fill if you have five contract, if you have 10 contract, if what happened. So you have to take your focus away from your screen just to see what's going on, and this was constant every single trade. So basically what happened is I opened Webull platform, and with Webull I have no issue. For me, this is the perfect combination for the actual execution of my trade is Webull, and my charting is TD Ameritrade. So right now I think I find the concept, not the concept, but I find the build how I need to trade. I'm doing it roughly a year now, and I'm very satisfied with it. Plus the commission per contracts on the option contracts on Webull is 5, 6, 7 cents, not dollars, cents. And when you trade 10, 20, 50, 100 contracts, then it's make a huge difference on a weekly level. The next important thing is the internet, right? With the internet, in the beginning, I had a lot of issues, and the main problem is when you don't have a fast internet, your basically everything is gonna lag. And the lag, even if we're just talking about, you know, seconds, half a second, because it has latency and everything, then basically you're not gonna get filled. Even if your idea is right and the chart showing you the right thing, you wanna execute right, but in reality the price in real time is already moved away from you, so you're not gonna get filled. And this was the main issue for me with TD Ameritrade platform for trading, for the actual trading, is as a day trader, you want to execute fast. You want to be in the trade fast. You want to be out of the trade fast. But with TD Ameritrade is a very, very lagging, and to me it wasn't performing well to have everything in the same company, right? The platform and the charting. So that was another reason also why I chose Webull and Interactive Brokers initially, and then Webull after, because I traded with TD Ameritrade platform for a long time, and one day I just had enough. I couldn't take it anymore, so I looked for another broker. The other is the internet. It's exactly same thing. If you're not gonna get filled, it worth to pay an extra $10-20 for a fast internet package, so you're not gonna have issues like that. And also, imagine you are in a trade and your internet just goes away for 10 seconds, 15 seconds, 20 seconds. You know, might is nothing gonna happen with the trade itself, but your mind is already gonna get scrambled, and you're not gonna be able to focus and pull it back at the same moment. So it's very, very difficult to constantly concentrate on the market, on the candles, on the movements, on the plan, and you just don't need these easily avoidable side problems be in your mind. The what ifs, right, is always difficult. So far we talk about the education, right? We talk about the fake gurus, we talk about the platforms, we talk about the computers, the screen sizes. With actual trading, I don't want to get into actual breakdowns and actual trade concepts. That's gonna be in another video. But you have to trade smart, you have to trade small. You just cannot jump in anything what moves. You cannot give into FOMO. And also my suggestion, when you guys start to trade, read also books about how you can strengthen your mental awareness, not just general trading, but on everything, because that is very, very helpful on the actual days when you have difficulty, because not every day is just straight up, straight down. You enter into the market, you exit the market, you made your daily profit, and you're done. So that's very, very helpful. Also, you guys has to set a realistic goals for your trading account size, right? So if you have a $2,000-3,000 trading account, don't expect to make tens of thousands of dollars a day. You have to be in a reality. What is the expectation? If you make a goal of $100-200 a day, which is, I think, with the couple $1,000 account, is achievable constantly. And when you have a small account, really the small account itself is basically for a proof of concept, right? When you have a small account, when you are new, when you have your new strategy, that's how you can really make sure your strategy is profitable. First, you don't need to look at the money. Do not look at the money at the beginning of your journey. You want to be sure about your trading platform. You want to be sure about your plan. You want to make sure your plan is profitable. It's gonna produce the money when you step up, when you raise your contracts, when you raise your share sizes, because to make the money is really, that's what it is. You're not changing the proof of concept of your plan of your trade. You just only raising your share sizes, right? That's all it is. If you traded 10 contracts, you made 10 cents, that's $100, right? If you're trading 20 contracts, you're still making 10 cents, that's gonna be 200. If you're trading with 50 contracts, you're making the same 10 cents. That original $100, in this case, it's becoming $500, and you didn't do anything else. The concept of your trade is exactly the same. You just raised the share sizes, and that's all you need to do. You don't need magic to change everything all the time. You just have to stick to your plan, what you build it in the beginning of your journey. And that's why it's so important to start small and not to give in this crazy hypeness what you can see on the market. Because if you give in and your mindset is not there in the beginning, especially when you have basically no idea, no screen time, no proof of concept, it's gonna be very, very difficult for you to achieve success. And I think that's why so many traders fail on the market, because they come into the market with unrealistic expectation. And you know, that's end of the day is the trader fault, right? Because they didn't made the proper study, didn't made a proper build. You know, you cannot say, oh, this guru told me this, that guru told me that. End of the day, you're gonna be the one who's pushing the buttons, right? And unfortunately, this is a very addicting game. It can be a very addicting game, especially if you had luck in the beginning, and if you made big wins in the beginning. Because in the beginning is, doesn't matter who say what, is just luck, because you didn't know what you did. You didn't know you had a profitable plan. So that's why it's important to build a plan. And back to the share sizes, back to the goals. Just be realistic. Once you reach the goal, you just have to close your system and leave. And if you remember, I told you this in the beginning. If you stay long enough on the market, eventually you're gonna give it back. Because unfortunately, just for a lot of people, this is how the market works. You have to be aware. Once you have money, and especially on the green account, you need to build it. You cannot wait for the Hail Mary passes and on one trade try to make the whole month plan. Is just not gonna happen. Step by step. And as you're building your account, you're building your confidence with it. You're building your confidence with your plan. You're adding screen time to your trades. And once you do that, you're gonna have a feeling for the market itself in general, how it moves. And then another step coming in, right, is you don't need to be a jack of all trades. You just need to know one thing well. one strategy well, and that one strategy, if it's profitable, that can serve you every single day on the market, because the market is not changing. You just have to be aware what's happening around you and know when to quit, know when your stops are hit. Very, very important concept, because on the market you can do only two things, right? Either you give profit back or you leave money on the table. But what is the preferable choice? I think for a lot of profitable traders, and if you know listen to the episodes, you will find out most of them prefer to leave money on the table, right? They make their profit, they go with the plan, but the most important thing for them is to know when to stop. And that's what the new traders don't. They just want to be on the market constantly. And again, if you stay long enough, you will give your profit back. Just exactly the same way as you in the casino. If you stay long enough, you're gonna go home with an empty pocket. And the same concept true over here. Also, one thing is worth to mention, and I think over here I have a little different thinking than with some of the peoples here, is the trading in the simulator, trading with the paper accounts. Those is, I think, is not gonna help you on the trading side itself. What is gonna help you with, and what my thinking is with the paper trading and all that stuff, is to be familiar with the platform itself, know how it works, know where your buttons are, know how it's built, know the execution speed and all that. That's all it is, nothing else. Because the reason why I don't think it works to don't be on the don't be on the market until you're profitable in the simulator or on the paper trading accounts or anything like that, because the concept as you trading with fake money, it's completely different. In reality, you can be profitable on paper accounts, but once you need to go live and play and trade with actual money, it's gonna be different when you put $5,000 on one trade and it moves against you. Your stomach is gonna feel it. Your mind is gonna play trick with you. And if you don't have a mental strength and an experience, what you already build it, if you trade on the account with a small size, you can build this concept. You can trigger your mind how it's supposed to work. But if you don't have experience on the market, paper trading is not gonna help you, because you can average down as far as you want, you can add to your trade as much as you want. Is not gonna trigger the same emotions in you as when you have your own money on the line and when your money actually working. And that's exactly the same thing, you know. That's why even profitable traders, right, people who make money, sometimes, you know, they jump out of too early. Well, that's really not true, because most of us, we stick to our plans, whatever it is. If you see my accounts, you know, I'm telling you guys every single day what's need to be done and how you guys doing it. But yeah, that's a very very important element in my thinking, how to start and how to do the beginning of your trading journey, because that is the most important thing. The education, the book education, not the fake guru education, the book education. So on your own, you know why you're doing what you're doing. Do not take trade alerts. Reason why is because any alerts, any recommendations you're gonna get is gonna be late. It has latency in everything. The moment somebody tell you buy here, by the time it's getting to your ear, by the time your mind is realize what you need to do, it's already seconds past. And sometimes on the scalping market, as the day traders most of the times do, it's already too late. It's already too late. And if your mind is already tricked with you, it's gonna be very difficult to get back from there. And just don't depend on anybody. Learn on your own. Don't follow wannabes, because again, most of these guys plans are never implemented on the market. And if you get just simple strategies, you can see it on your own. Crossovers, MACD crossovers, this crossover, that crossover, it doesn't work. Most of these indicators, 99% comes when the derived data from the previous times back on the market. So by concept is lagging indicators, right? If you want to trade anything, again, I don't want to get into it, but these you need to learn. Trend line, support and resistance level, those gonna be there on your chart throughout the day, throughout your next couple of days, right? So if that's the case, that's a leading indicator to me, because it's on your account. It's gonna interact, the price action is gonna interact with that. So let's just summarize it again. Education, very very important. Computers, screens, internet service, very important. Don't give in to fake guru courses. 3 hours is not gonna give you any magic. You're not gonna be a millionaire the next day or 2 days after you took the course. Build your plan, follow your plan. Trade small, trade smart. Alright, what's up you guys? Welcome back everybody. It's the beginning of a new week. Today is Monday. A very very interesting day on the market. Definitely the 2 days did give some opportunities to the long side, to the short side. So today it was a tradable day, but a little after 2 o'clock it's a huge algo spike came into the market, and basically it's flushed down everything, and then we rebought everything. So it's a crazy day. On the news, what's really nothing new in it, everybody knew already. Banking, mortgage, nothing new, but a great example is how the computers are affecting the market. Anyway, today is another green day. We traded 5 times today. 4 of them was a winner, 1 of them was a loser. So overall it's an excellent day for our account. And let's go in. Let me explain what I see, how I see it, and why I entered and exited the places where I did. So let's get in and let's get started. What's up, you guys? So let's start our daily recap. Well, today was a very interesting day. It gave us opportunities to the long side, to the short side, and basically, unfortunately, anytime I entered into the market, it's became very choppy. So the results wasn't such a great results. The entries and exits was perfect, so where I supposed to be, and we managed another green day. So let me explain to you guys how all this unfolded. Right, today we opened, we can call it flat, right? It was nothing major. We opened very close to the Friday closing date. So in this case, usually what I do, have to wait for a trend, right? From a morning, we have a little bit of downtrend, right? Because we have a pre-market high, and then basically we just trending down, creating lower low, lower high, lower low, lower high, lower low, lower high, right? So basically we can get our trend line a little bit established. We are already in a downtrend compared from the pre-market, as we hit a double top, close to a double top. So usually I wait. We have to establish a trend, what's gonna happen. So definitely we have to create a couple, either higher highs, higher lows, lower highs, lower lows, so we're confirming our direction, right? So my first entry was 1018, and this is 10, actually, yeah, it is the green candle. I'm just gonna put our arrow here. This was a counter 10 trade. We have already a downtrend, but if we compare for the pre-market, we have a support level, right? And also if we try to establish what happened a day prior, we have our pivot level very close. Actually, we have two pivot levels. So we have pre-market low, pivot level, and basically we just hit exactly that. So we had our week, and you guys know about the weeks, how I try to trade them, and usually what I think what happened when we hit that. So basically what happened, we created, compare to the morning, we created a lower low, lower high, and then we wick down, right? I still didn't enter, but we came down the second time and we established a very short double bottom here. So as soon as we started to curl, I entered as we broke the candle. It went higher. It wasn't a significant rise. We were chopping around a little bit. We never broke the low, and in this case, again, we just wick down. We never closed on the 5 minutes. We never closed below. So this one is created another wick, and as we came down, I added to my position at 41. So this was a quite a long hold to wait. So basically I entered 39, 40, 41 as we were making a new high, as we were breaking out. So I had two entries, and if you guys recall, I explained in my point of view, what's the difference between averaging down and scaling in, right? The averaging down, basically what it means, eventually here we were in the losing position, right? But the losing position didn't create any breaking of a structure, right? We had the previous low, but we have a pivot. We had another pivot level, right? Which were at that time the high of the day. So this level, let me just put a line over here. This level basically acted as our support level, right? As we came down, week down, we basically never reached that level, and we're starting to trending up. And if we go to the 5 minutes, exactly that's what it is, just a wick. So basically I stayed in that position and I adding in. So basically, as it reached my entry level, I added to it on the same spot. In this case, the price was a little bit lower, even the actual underlying price was higher. So my average was between the two. So it's nothing major, but it between the two as it broke out. Let's go back to the 1 minute. So that's the difference between the scaling in and averaging down. Averaging down, basically you just keep adding. If it's breaking down here and you adding here, that's basically an averaging down, right? Because you waiting a structure to break. When it's, in my point of view, this would be my exit. And if you averaging down, this is where you adding to it. Same thing, continue down, averaging down. I wouldn't be in this position anymore, but this is how you're losing the account very quickly. In every support level, you adding to your position as you think it would bounce, right? So you're adding to the position to go back higher, but if it doesn't work out, then basically you double down on a loser. In this case, you triple down on the loser, so you can blow your account out of the water very, very quickly. Scaling in, it's already established, right? Another trend up, so I added to it, and it was a right decision because it will continue higher. So my exits from this position, and let's not forget we have our trend line from the morning. So my first exit were on 49. I was scared out of it, so I never exit on one stop, on one exit. So the first exit, it's the fourth bunch of exit, it's on 49, 48, 49. As we were breaking VWAP, make sure it's no rejection, because we had a rejection here. We don't know what will happen here. So basically, as we were breaking out, I exited, not the whole position, but I exited. So we're taking profit, right? And then when we took profit, we'll see what's gonna happen. Then we're moving our stop higher, and then we consider that one as our new stop loss, basically. Because from here to still waiting for this structure on the option, that is drastic drop, and that's just kill your account, right? Because you go on the structure of the underlying, not on the option. So this would be our new stop, right? Wick down, we established a little support over here. So if VWAP breaks and the market heading down, then basically this is your exit. As it broke the pivot level, as it broke a new support, that would be your exit, right? So in this case, exited partial exit. Let's see what happens with the market. Next batch exit, 49, it was 58. 58, as we heading higher, exited, making a new breakout, exit a bunch, pushing our stop loss higher, right? Because we created a little support at VWAP. Next batch, so it's 1, 2, and the third and final 11 and 12 on the very top. 11, 12. So this is where we exited. So this was a perfect trade. But nevertheless, because it took so long to get up here, it wasn't a bad trade. It was about 90, 120, about 25-30%. So it's not a bad trade. It just took for a while to establish itself and to be able to take profit. We did perfectly, you know. We scaled out as we went higher. Over here we stopped. Why exited everything out of here? Because on the pre-market, right, we can look at this level, the 80s, as a major pivot level, right? We had a top, so we had a support, resistance, we flushed, it came up, it flushed down. So this one is a level what we considered, right? So, and already pushed quite a lot, so it was absolutely no reason to hold it. We could have held it a little bit more to see actual, if we're making a daily actual market pivot high, but the pre-market, it was more distinguished, right? So I decided to take all my profit and exit from there. So this was our first one. Let's just get speed up a little bit. It took so long to explain this one. All right, so the next batch from there, basically what we created now, we had a lower low, and as we break out, we have a higher high. So in general, two things you can do. Either you have the VWAP and you're waiting for as the support for the VWAP. In this case, it didn't happen. I didn't even consider that. But the next best thing when we're creating a new high. So as you had the trend line break over here, because we had the trend line, right? You could consider this one, this entry, and also we're breaking a support, breaking down a support, breaking down a trend line. We can enter here targeting VWAP, right? It's not a big distance. So yeah, for a quick scalp, definitely working. So in my point of view, we had to create a higher low, right, to establish an actual trend. And exactly that's what happened. We created a higher low. We retested our original trend line, what we broke out of here. We retested our trend line. And then we could have an then we could have an entry as we break out of here. I didn't enter here. I missed this entry. I didn't want to chase it. So that's it. This would have been another nice entry. But what happened after this, because I missed this entry, now I had to wait. I had to see what's gonna happen with the trend. If we're creating another, what we're creating, a higher high, right? So if we're passing this pivot level, then we would create a higher high to establish an actual trend, right? Higher low, actually this was a lower low, lower high, higher low, So to establish a trend, we have to have over here a higher high, right? But we didn't get it. So basically, we started to form. We can put, well, actually, if we go, we can go, let me take this one off. We can consider so instead this high, we can take our pre-market high, right? They should have been there before, but we can, just for information purposes for you guys. So you see we break out, but we flushed it back down and creating a lower high. So as we came down, we started to trend inside the wedge, right? So the next thing, what we have to see, how we forming. So we created a support around 412.06, right? So in this case, because this was just a wick, what I usually do, I move it, because this is just a wick, and over here we established already a low and a support. So I move my trend line and try to consider trades from there. And exactly that, as we hit it the second time, we went back up, hitting again our trend line. And how we trading the wedge? Two ways we can trade. We can trade as we hitting the low or the high. Over here we trading, start to enter to the long. Over here we start to enter to the short. But the proper way to trade, to wait for an actual breakout and a pullback, breakdown or a pullback, and then continue, right? Same thing, breakout, pullback, continue to the long side, because here we just have no idea where the market's heading. So my next trade, it was at 12:45. 12:45. All right, 12:45. We break down, right? And that's, we're considering the red candle, not the greens, the red one. So as you guys looking up 45, you see that's the red candles. So my entry, we break down, we break out of our trend line, out of our wedge, but we're not taking the actual candle what it's breaking out. We wait for the retest. We trading on the 1 minute, so we have to trade the 1 minute. Breakout, retest, and as it comes down, breaking, making a new low on the new candles, that's where I entered. And the exit was very, very quick as we created a new low, breaking down our support level, exited 49 exactly on the candle when it started to go green, as broke up, creating a new high. That's where I exited. This little trade, it gave me a little bit less than 10%. So this is what we have to see, right? This little trade, actual quick breakdown, little bit less than 10%. It's about 9.5%. Very, very quick move down. And these over here, the choppy market, chop, 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 these give me about 30. That was a quick one, right? So next trade, I tried to do exactly the same thing again. We went back up, tested, but that one is my loser. So in that case, we entered 1255. 1255. As we went up, we never closed. We closed inside, but we started to flush. So I entered right here, 1255, as we continue or move lower. Unfortunately, as it came down, right away wick up, never break out on the other side, right? VWAP support, so I never exited, waited if it's continue down, right? Unfortunately, it didn't continue. Where do I place my stop? Exactly, we created a little bit of pivot level right here, which was aligned completely with the VWAP. So my exit oh 08 7 right there. That was my exit. So this was a very, very quick loser, right? So this one, basically whatever I made over here, I give back completely, and just a little bit more. So this was about a 12% loser, so it's a little bit more than this one. And then quickly, our next trade, I entered 135. And why is 35? Let's see, 31. Sorry, I was correct, 31. So let's see, what is the 31 candle? 31 candle is the second green as we break out. So this was my next XLE to the long side. We break out, we have the trend line to the up, we broke the wedge, we retested the trend line, we created another high, right? We broke out pivot level, support by VWAP. As we were curling up, we break out, and the market just closed. I entered, and this is where it gets very, very interesting. I exited out of it $46 as we were creating a high, 46 and 57, 46 and 57, and I exited 57. And this is what happened right after. So basically we had 1, 2, 3 winners, 1 loser, and we flushed. I was out completely on this part, and in this case we have to see what is our structure, right? Remember in the beginning I talked about to breaking basically our first pivot level on the market open, after the market opens, right? But we didn't, so we have to exit. This is the difference between the new traders and an inexperienced new traders and a seasoned trader. You never enter for an actual breakout, and especially not in the 2 days market. I think I mentioned this already, because we have no actual trend on the market. So every breakout, we have to wait for the retest. Every single one, if it's trend line, if it's support resistance level, we have to wait for the retest every single time. Because exactly this is, well, we cannot say because exactly this is what's going to happen. This is anomaly on the market. When a news came out and the algos just flush the market. This is, sometimes I'm just wonder, how this can be allowed on the market itself, but it is what it is. Because even if you place your proper stop loss, in this case, when it's a flush like this, you just your stop just gets skipped and you kept in the trade. So unfortunately, a flush like that is it can be devastating. And after hindsight, you can say, "Oh, right, but we had the low of the day, we had a new support level." After a flush like this, I don't know. At that very moment, as it flushing down, yeah, people would enter. It could explain, but I just don't see the reasoning why you entered at this as it still flushing down, right? Because this is basically is just you try to catch a falling knife and already broke the low of the day on a high volume. At that moment, why would you enter here? Well, it is what it is. For a hindsight explanation, it's good. But what happened, I tried to enter to the long side here. As we broke our original trend line, we came back above, remember, 1206. We pulled back, we retested that level, and as we broke out, I tried to enter here, but it was such a burst of momentum, I didn't get filled. So basically, I didn't even entertain any further to try to enter right here. Once we made all the way up, in my thinking, a lot of people try to go short here. As again, inexperienced people, inexperienced trader would enter for the actual breakout, right? Or breakdown. In this case, that's low of the day breakdown. But again, let's not forget on that end how far we came from the top. Regardless what is the news, what's happening on the market, these you have to wait for the retest, right? You have to break down, you have to chop around a little bit, you have to come back, and then you continue. Then you enter for the breakdown, right? In this case, it never happened, so it was no justification to continue to the short. But it broke our trend line. It came above our previous support level, retested our previous support level. So here we have a justification to enter. Unfortunately, I didn't get filled. It would be a nice move. It is what it is. Wait for the next formation, what would happen. My next entry, what I was thinking, once we get back all the way up here, basically we are at the high of day. We would be very close to the high of day. We would be close to all of our pivot levels. And let's not forget, all these people who try to enter short, it's underwater. So it would fuel, and exactly that's what happened from this point, it would fuel the upward momentum. It would give us a nice squeeze. That's what happened, a beautiful short squeeze. So my last entry was at 26. 29, 26. Basically, as we were creating the new high, right? It's unfortunately it's just a little weak. It didn't went right away, but again, never broke our structure. In this case, this would be our stop, the 1260-ish area, right? We created stop here. We stopped going lower, and then basically as we flushed down, came back up, that's where the big move started. So this where would be a reasonable stop for our entry, right? Never came down, we stayed in. Again, where would we exit? My exit came 37. Where is 37? Just a little short trade as we were breaking our high, right? I didn't stay in. What happened? Came down. It could come down because this was such a short, such a small position. I exited at once. When we came up here, at once, out, and we're done. And then from this point on, the VWAP gave us some support, and we stayed basically in the general area, right? Where we break down, where we did stop. So that initial 1260-ish area provided very nice support. Let's see how it looks on 5 minutes. Exactly. Both of the breakdown is just only a wick. But anyway, today was a very, very interesting day. Maybe I'm gonna make a video about the algos, the algo flush, how we should trade, how we're supposed to do, what we have to look out if that wasn't happening. But anyway, it was a great day. 5 trade, 4 green, and for you guys, just have to be careful, put your stop losses. Unfortunately, in this move right here, your stop loss wouldn't really help if you got skipped over. But anyway, it's a green day. Learn, study, try to be better every single day. And tomorrow's a new day, and we're gonna get right back in it. All right, so if you guys find any value in my channel, so far we have, surprisingly for me, I never had any kind of channels like this. It's nice to see how many of you guys watching my channel every episode. The subscribers comes in, so I'm very humbled and I want to say thank you. And please, if you're new, hit the subscribe button, hit the like button, is really helping for the algorithm, and turn on your notifications so you guys gonna be one of the first one who's getting my new video. All right, so thank you very much, and see you guys tomorrow.